The creator and CEO of ARK Invest, Cathie Wood, has made waves in the investment community with her audacious and visionary approach to investing. Among her most well-known investments to date is without a doubt her substantial stake in Tesla, an investment notable not only for its size, but also for the conviction and foresight behind it. She has been a vocal supporter of Tesla's potential for a number of years, even though many on Wall Street were pessimistic about the company's prospects. However, even the most seasoned investors occasionally make mistakes, and it appears that she underestimated Tesla and was forced to change her forecast to a more optimistic height in the world of investing. Founder Cathie Wood is a notable figure specializing in disruptive innovation. However, despite making many fortunes during the early days of the pandemic as Tesla and others' favorite surge, a devastating 2022 sell-off wiped out those gains. In this video, we explored Wood's thoughts on Tesla's market share, battery cost, and why she remains bullish on the company's future. But before we go there, be sure to smash that like button and subscribe for more content. Despite the unfavorable macroeconomic environment and elevated interest rates pulling down the market overall, Tesla is currently the fifth largest holding in Wood's investment firm ARK, valued at approximately $487 million. Wood has remained bullish during the downturn, predicting a 1,500 Tesla stock price per share within the next 5 years. The majority of Wood's $487 million stake in Tesla is held in its flagship ETF, which has added more than 300,000 shares of the company to its portfolio in the last month, despite the macroeconomic climate that is unfavorable and the high interest rates that are pulling down the market overall. Wood has remained optimistic throughout the decline, even forecasting the price of Tesla stock in an interview last month. There are people who don't buy his cars now, referring to the recent price cuts on Tesla models. But if he does what we think he's going to do on the cost side, she continued, there are a lot of people who will use Tesla, according to shareholder Cathie Wood, who predicted the company's stock price will reach 1,500 within the next 5 years. Economics as a guide, and I believe that the number of those individuals is significantly greater than the number of detractors surrounding Twitter. One of our firms in ARK Invest anticipated that Tesla's 17% market share of electric cars worldwide, including China, would decrease to a lower amount. Instead, the company's market share climbed to 18%. Wood's main objective was to introduce Tesla competitors' products to the market. When asked what she thought of Tesla in 5 years, Wood said that the company has an advantage over its competitors if one compares vehicles not by brand but by range and power combination. Added then, most automakers will not be able to keep up with or reach Tesla's combination. Wood also said that Tesla is the Mercedes when it comes to range and other important metrics for electric vehicles. She added that Tesla's battery cost is 3 to 4 years ahead of any other auto manufacturer in terms of cost declines. In response to a tweet from ARK Invest Director on January 7, star investor Cathie Wood stated that the EV opportunity alone is tremendous. Branding is something different. Other automakers have brands and a lot of people have brand loyalty. But she believes consumers will start to shift from gas to electric and look at the specs of the different cars. She did acknowledge, however, that other well-known automakers like Volkswagen and BMW have made a great stride in recent years, but that Tesla's range and power are unmatched. In the middle of ARK Invest published an updated version of its open-source Tesla value model. Investors may expect the Tesla model to be valued at $460 per share in April 2026 if they keep buying Tesla stock. It's crucial to keep in mind that the Tesla model was drafted prior to Tesla completing the 341 stock split in August. Nevertheless, Cathie continues to express her unwavering enthusiasm for Tesla in regards to asset manager holders. Tesla is unmatched despite the fact that Tesla shares have dropped 58% over the past year due to concerns about supply and demand. Cathie Wood has continued to pile more money into the company by buying more shares on January 18th. The ARK Innovation ETF, which Cathie Wood purchased multiple times in January, is currently third in the industry overall. We are as bullish about Tesla as we have ever been. ARK funds bought 4,983 Tesla shares on January 18th, valued at $6.4 million at the close of trading, citing a CNBC webinar that predicted significant gains for the stock just from electric vehicles. The stock could almost double in value over the next 5 years, and if you believe in autonomous cars at all, it could increase by closer to 13 times. While Wood acknowledges that the company's recent price reductions are prudent, she maintained that Tesla will maintain an aggressive pricing strategy. She claimed that Tesla can afford to make these price reductions because it has the lowest cost structure and is the most innovative, but that the other automakers will have to follow suit, which will negatively impact their margin and profitability. Nevertheless, there are still serious worries about what some have called Musk's Twitter diversion, which refers to his use of the platform and his contentious tweets. Dan Ives, a Wedbush analyst, recently disclosed to Yahoo Finance that Musk is the only person capable of extinguishing the fire that he ignited in Tesla shares. Musk recently testified in a Tesla shareholder lawsuit, following the controversy he caused on Twitter by attempting to defend his stance. Elon Musk, the CEO of Tesla, stated that he thought it was absurd that his tweets could have an impact on the company's stock price given the current situation. However, he had previously tweeted that he believed the stock price was too high, which some observers may have taken to mean that he acknowledged that his tweets have an impact on stock prices. Musk went on to say that a correlation could only be made if the stock price actually dropped, adding that it's not like people would automatically listen to or act on anything I tweeted as a result. The CEO clarified that he did not believe there was a causal relationship between his tweets and the overall price of Tesla shares. Based only on its EV business, ARK's 2026 price target for Tesla stock would be approximately $500 per share, or 4 times its current valuation. The revised prediction takes into account the August 25, 2022, 3-for-1 stock split that was announced. Additionally, in mid-April 2022, ARK's analyst Tasha Kinney disclosed that the firm will no longer incorporate ride-sharing or autonomous vehicles into its valuation process. According to the firm, these real factors will determine approximately 60% of Tesla's worth over the next 5 years. Furthermore, she stated that the anticipated $500 per share stock price represents a massive 4-fold increase over the current stock price. However, she added that while it may be understandable for ARK investors to exclude ride-sharing or full FSD from their valuation, full FSD may be achievable in the near future, meaning that the price of Tesla's stock would rise by many orders of magnitude. Tesla's fully autonomous driving, FSD, capabilities allow the car to drive itself in certain circumstances, but a safety feature prevents drivers from giving up total control. CEO Elon Musk says that soon, drivers will be able to disable the safeguard, specifically the steering wheel. The nav feature asks the driver to keep their hands on the steering wheel at all times. If they don't, the system will force them to move the wheel occasionally to make sure they're paying attention. Recently, someone on Twitter proposed that anybody using FSD beta for more than 10,000 miles should have the option to turn off the steering wheel. Musk and Nag concurred, stating that the upgrade is likely to provide since this technology won't be available until February. Even bullish ARK's 500 per share price predictions may be overly cautious. Additionally, since full FSD will not be available for some time, it may be impossible to precisely predict how far Tesla stock will rise in the future. Please hit the like and subscribe buttons on our channel if you enjoyed this video. I'll see you in the future international video.